Here is the comprehensive, technically deep and rich expansion of your content. I have maintained your exact headings, but infused them with transaction codes, T-code, VOFA, database table references, VBRK, and the kind of insight that prevents production disasters. 13. Billing type controls. Billing is where SAP SD creates legal, financial truth. Up to the point of delivery, everything in the system is operational. It is a plan or a logistical movement. The moment the billing document is saved, VF01, the transaction transforms. Financially posted, it hits the general ledger, GL, and accounts receivable, AR. Legally binding. You have formally demanded payment from the customer. Auditable, tax authorities treat this document as evidence of tax liability. Irreversible, without formal reversal. You cannot simply delete a posted invoice. You must issue a credit memo or cancellation to offset it. Because of this, billing type controls, T-code, VOFA, are among the most sensitive configurations in SAP SD. Mistakes here do not cause system issues or user annoyance. They cause audit findings, tax penalties, and material revenue misstatements that can affect a company's stock price. A senior SD consultant treats billing configuration with the same seriousness as FI, financial accounting, posting logic. What a billing type really controls. A billing type example: F2, invoice, G2, credit memo S1 cancellation is the control tower for the financial interface. It controls whether revenue is posted. Does this document talk to FI, financial accounting, or CO, controlling? Which G or L accounts are hit? Does it post to domestic revenue or service revenue? How taxes are calculated? Does it trigger VAT, GST, or sales tax logic? Whether posting is allowed at all. Is this a pro forma, print only, or a real commercial invoice? Whether billing is delivery related or order related. Does it look at the shipped quantity or the ordered quantity? How cancellation works. If you cancel it, does it reopen the delivery for billing again? Which outputs are triggered? Does it send a PDF via email, print a hard copy, or trigger an EDI 810 or IDOC? Whether billing is provisional or final, critical in industries like mining or oil and gas, where final prices are determined later. Billing type is the bridge between SD and FI. If the bridge is broken, SD sells, but FI never gets paid. Core billing type control fields, must know. These are the specific fields inside T-code VOFA that dictate behavior. Billing category. This is the VBTYP field, SD document category, and is the most powerful field in billing type configuration. Examples: M invoice, the standard commercial invoice. O credit memo, reduces AR. P debit memo, increases AR. U pro forma invoice, no accounting impact. N invoice cancellation. Billing category determines. Accounting direction. M debits the customer, and credits revenue. O credits the customer and debits revenue or returns. Posting logic. SAP knows that a U, pro forma, should never create an entry in the BKPF accounting header table. Document flow behavior. It tells SAP whether the preceding delivery is now closed or if it remains open, as in the case of a pro forma. Senior insight. Wrong billing category equals financial disaster. If you set a credit memo to category M, you will accidentally charge the customer instead of refunding them. Number range assignment. Configured in VN01. Controls. Legal invoice numbering. In many countries, example, Italy, India, Brazil. Invoice numbers must be sequential and gapless. Audit traceability. Auditors look for gaps. If invoice 9005 is missing between 9004 and 9006, they assume fraud. Statutory compliance. Separate ranges distinguish between domestic and export sales. Best practices. Separate number ranges for tax invoice, official legal debt. Proforma invoice, information only. Export invoice, different series often required by customs. Credit memo. Never reuse number ranges across legal invoice types. It confuses the customer. Is this document 1005 an invoice or a credit note? Cancellation billing type. Defines which billing type is used to cancel this billing document. Example: F2, invoice, S1, cancellation invoice. G2, credit memo, S2, cancellation credit memo. This ensures reversal postings, the cancellation document, S1, is configured to post exactly the opposite accounting entry of the F2. Clean audit trail, you can see the original mistake and the correction. Senior rule, greater than never allow manual FI reversals, FB08 for SD invoices. Greater than if finance manually reverses the accounting document, the SD invoice remains open in the system, causing a permanent reconciliation break between sales and finance. Always use VF11 cancel billing document. Posting block. Controls, whether accounting posting is allowed automatically. Used in pro forma invoices, always blocked, no posting wanted. Statistical billing, no posting. Milestone billing, sometimes blocked until a project manager approves the milestone. High-value invoices. Some companies block invoices greater than $1 million automatically for manual controller review. States posting block ON. The billing document is saved in SD VBRK table, but the status RFBSK is set to error or blocked. No accounting document is generated. Posting block off. As soon as you say VF01, the system attempts to create the accounting document immediately. Billing relevance, from delivery or order. This is actually controlled in the item category, VOV7, and copy control, VTFL or VTFA, but the billing type must be compatible. Billing type must align with delivery relevance. If the delivery item is irrelevant for billing, you cannot create an F2 invoice for it. Item category billing relevance. If the item is set to order-related billing, trying to create a delivery-related invoice, F2, will result in an empty invoice. Mismatch causes, greater than billing document, not created errors. Greater than incomplete billing, an invoice with a header but no line items. Account determination procedure. Billing type influences, which account determination procedure, K0500, applies. This affects revenue accounts, sales domestic versus sales foreign. Discount accounts, sales deductions. Tax accounts, output VAT payable. Senior insight, billing types must be carefully aligned with VKOA logic. Often you assign a specific account assignment procedure to the billing type so that credit memos hit sales returns and allowances accounts while invoices hit sales revenue accounts. Tax determination control. Controls, whether tax is calculated. Which tax types apply, country specifics. Examples, domestic invoice, F2. Triggers standard tax procedure. Example, MWST. Export invoice, F2 or export. Triggers export tax codes, often 0% or exempt. Intercompany invoice, IV. Triggers specific reverse charge tax logic in Europe. Tax errors here are legally punishable. If the billing type fails to determine tax, the company is undercollecting and is liable to the government for the difference. Pricing procedure relevance. This field in VOFA is called document pricing procedure. Billing type decides whether pricing is copied. Does it take the price from the order or delivery one? Whether repricing happens. Does it fetch the latest price from the master data? Examples. Pro forma, F8. Pricing copied exactly. Credit memo, G2. Usually B, carry over new pricing to ensure the refund matches the current value. Or D, copy unchanged, to match the original invoice exactly. Senior insight, repricing at billing is dangerous unless intentionally designed. If prices change between order entry and billing date, the customer might receive an invoice for a higher amount than they agreed to on the sales order. Output determination procedure. Controls, invoice print, the layout, Adobe Form or SmartForm. Email, sending the PDF to the Bill to contact. E-invoice, integration with government portals, example, SDI in Italy, CFDI in Mexico. Missing or wrong output, compliance failure, if the invoice lacks mandatory legal text, controlled by the form assigned here. Customer disputes, I never received the invoice, so I am not paying late fees. Partner determination procedure, controls, bill to party, who receives the invoice document, payer, who pays the bill, and whose credit limit is checked. Senior insight, billing partner determination must be stricter than sales order. You can have an order without a payer, sometimes, but you cannot have a billing document without a payer, or the accounting document will fail to post. Account type D requires a customer number. Standard billing types, behavioral understanding. F2, standard invoice. Used for normal customer sales, order to cash. Characteristics, posts revenue, credit P&L. Posts tax, credit tax payable. Creates accounting document, debit customer, AR. Doc flow, updates delivery status to fully invoiced. This is the most common and most audited billing type in the system. G2 credit memo. Used for returns, defective goods, pricing errors, overcharge. Characteristics, negative posting, credits customer, AR, debits revenue, or returns clearing. Reference, usually mandatory, referencing F2, to ensure you don't credit more than you originally billed. Audit sensitive, high risk of fraud, issuing credits to friends. Senior rule, never allow standalone credit memos, without reference, unless strictly approved by a workflow. L2, debit memo. Used for revenue increase, correcting underbilling. Characteristics, positive posting. Same accounting direction as F2, debit customer, credit revenue. Process, often requires a specific debit memo request document first for approval. S1, cancellation invoice. Used to cancel an F2 invoice. Characteristics, exact reversal. It flips the accounting entries of the F2 exactly. Clean document flow. It links to the F2 and opens the delivery back up so it can be billed again correctly. Pro forma invoice, F5 or F8. Used for customs, F8. For export declaration values. Internal reference, F5. For order-related checks. Characteristics, no-fi posting. The posting block is grayed out or set to block. VBRKRFBSK equals empty. No revenue. It creates no GL entries. Repeatable. You can create 10 pro forma invoices for the same order. It does not consume the billed quantity status. Misuse risk. Greater than business treats pro forma as real invoice. If you send a pro forma to a customer and they pay it, you have unallocated cash and no AR open item to clear it against. Billing timing control. Billing is not just about type, but trigger. Billing can be delivery-related, typical for goods. Triggers from the delivery note, post-goods issue. Quantity equals shipped QTY. Order-related, typical for services. Triggers from the sales order. Quantity equals order QTY. Billing type must match. Item category billing relevance, TVAP, FKREL. Mismatch causes. Duplicate invoices. If you set up both order and delivery billing for the same item. Missed invoices. If the system is waiting for a delivery that will never happen for a service item. Intercompany billing considerations. Intercompany billing, IV, is a specialized area. Intercompany billing types, IV. Post revenue, in the supplying company code. Post cost, AP, in the selling or ordering company code. Use different pricing logic. Uses internal transfer prices. Condition type PI01. Not customer prices, PR00. Billing type must support intercompany tax. Specific tax codes that handle cross-company VAT. Intercompany reconciliation, IDOCs, are often triggered by the IV billing type to automatically post the AP invoice in the receiving company code. This is senior-level SD. A junior sets up F2. A senior sets up F2 and IV to work simultaneously. Common real project billing issues. 1. Invoice created but no FI document. Check posting status in VF02. Usually a master data error. Missing GL account assignment in VKOA. 2. Wrong GL account posting. Revenue went to service instead of product. Check the account assignment group on the material master or customer master. 3. Tax calculated incorrectly. Why is there tax on this export? Check the tax classification in the customer master, ship to party. 4. Credit memo without reference. Users creating credit memos manually. Breaking the golden thread of audit. 5. Cancellation not reversing correctly. Trying to cancel an invoice that has already been cleared, paid by finance. Root cause. Greater than billing type misconfiguration or misuse. How senior consultants debug billing issues. 1. Check billing type. VOFA. Is the document category correct? 2. Check posting status. VBRK or FBSK. Is it C. Posted, A. Not posted, or error? 3. Check analysis account determination. In the billing document, go to environment greater than account determination analysis. This tells you exactly why SAP picked a specific GL account or failed to. 4. Check item category billing relevance. Verify VOV7. 5. Check split analysis. If one delivery created 2 invoices, run split analysis in VF01 to see which header field caused the split. Example, different payment terms. Never debug billing blindly. Use the analysis tools provided in the billing screen. Mental model to lock in. Greater than delivery says, goods moved, operational fact. Greater than billing says, money and legal responsibility moved, financial fact. The billing type defines how truth is recorded in the company's books. Final perspective. Billing types are legal instruments, not just technical codes. Loose billing control, revenue leakage, tax exposure, audit failures. Tight billing control, clean books, predictable revenue, peaceful audits. A junior consultant creates invoices. A senior consultant designs billing truth. Say next when ready.